Welcome back. You're watching Stock Watch with me, Julieta Televi, and joining me to take your stock-related questions this evening are David Shapiro from Sasfin Securities and Wayne McCurrie from F&B Wealth and Investments. If you'd like to send questions, please email stockwatch@bdtv.co.za or SMS 41392. David, for good evening, and for the time being, we have only you because Wayne's obviously forgotten that it's Wednesday night, and he could set his life by his Stock Watch appearances, but there you go. It was quite a flat day on the markets as far as the finish was concerned today. Do you think there's a bit of, is there any nervousness about what the Fed will decide? Surely not. I mean, we don't expect them to do anything tonight, whether it be change rates, cut them, or raise them.
I think we've come out of such a strong start to the beginning of the month and to the beginning of the year, far greater than we expected. So there was bound to be some kind of pullback towards the end of the month. I don't think it's unexpected. Also, I think it's also affected by what's happening in US markets. I mean, Alphabet misses by a decimal point and the market goes tilt, and starts getting overexcited. And it's impossible to expect companies to maintain this kind of growth. So I think there is a little bit of nervousness. There's the Fed. The Fed now, as I say, what's he going to say? Because there's so many different opinions. And then on Friday, you've got the jobs numbers coming out. So, it's very difficult to put it all together into some coherent view and be right. So I don't think there's any worry about markets at the moment. I'm quite satisfied. We were flat. Wayne's back on, thank goodness. So,
Wayne, yes, indeed. Are you okay? So David's not too worried about markets. Are you quite sanguine, Wayne?
Yes, I mean, obviously, you would not expect a major correction at all going into a falling interest rate cycle. That's not the time for a correction. A time for the correction is in a rising interest rate cycle, or even in anticipation of a rising interest rate cycle. Our market is just cheap. There's no other ways you can describe it. The financials are cheap. The retailers are cheap, even though they've gone up quite nicely in the last week or two. The mining shares are extremely undervalued. So our market's poised for, hopefully, a falling interest rate cycle coming sooner than expected, some recovery in economic growth, and we can look forward to a reasonably good year on our markets, and a reasonably strong rand, we all hope, because if that happens, that would be quite normal for a global falling interest rate environment.
I'm with Wayne on that. I don't think we understand. We haven't factored that in, that rates are going to come down. In the Fed, whether it's March, April, May, it doesn't really matter. Once you go into that cycle, everything that has been taken down because rates have gone up is going to go the other way. I've been watching property shares here very carefully, and I know absolutely nothing about the underlying properties that they own, just watching the trends, and every day you can see the buying coming in and the shares edging up. And even if you look at some of the charts, you can see them starting to form a trend upwards. I mean, even in my own little competition, this crystal chat, I took 3 property stocks. I said, if I'm gonna go, this is where, and I don't even know what they do. I can't even spell them, but I took them. So and it's just a feeling that I think, it's going to be a good year because of that. So I'm with Wayne. You don't get corrections in falling market in years when interest rates come down.
Yeah, and particularly given the cheapness of the South African market already. Wayne, what are your thoughts towards the property sector and property stocks in South Africa? Because they have had a bit of a rally. I mean, do you think there's going to be much more to it, or do you think you temper your expectations?
The overall environment is improving. Excuse me, we spoke about this last year. Office vacancies, even though they're still very high, are going in the right direction. They're going down. Rental reversions, even though they're still negative, they're far less negative than what they were. And the companies are still at a discount to NAV. Now, they should never trade at NAV because there's a whole lot of uncertainty that's probably not taken into account in the calculation of the net asset value, but the discount is still actually quite huge. So I think there is still upside, but as you said, over the last 3 months, 4 months, the shares have actually, all of them have actually rallied quite nicely. And it's unfortunate now is that you were buying these at a 14% dividend yield. Now you're buying them at a 10% dividend yield.
Yeah.
So the true cheapness is behind us,
Okay.
but they still offer reasonable value at this level.
Okay. Getting on to questions and starting with an international related question. The viewer says, as all fast-growing companies revert back to the mean eventually, what are the panel's thoughts on how to balance between not holding too long and not selling too early, specifically for NVIDIA and Novo Nordisk, taking into account that they're at record high share prices and there's still a positive growth outlook for these companies? David?
It's quite interesting when we look at NVIDIA. I think you can't assume that companies are going to revert back to the mean. I think you have to understand and look at the fundamentals. That's how you base it on. Just put the history behind you and look at the fundamentals. In other words, scrap it and say, okay, let's move forward. What do I know about the company? And I was talking to an analyst, yes, a tech analyst, and he said that Meta have bought 350,000 GPUs, which I would assume are the NVIDIA GPUs, which go, I don't know, $40,000 a shot. So when they gearing up to that level, NVIDIA just selling whatever they can make. And against that background, you can't say, oh, this is going to revert to the mean. How much of that is already in the price? Well, that's up to you to try and assess. Yeah. But NVIDIA is not at ridiculous forward PEs. It's probably at only 28 forward PE. So all I'm trying to get at is do the fundamental research, understand the company, investigate, and then make your decision whether to get out or not simply because you feel it's run too fast.
Yeah.
So that governs me, and just be careful of getting out. We got out at 4 rand, so oh no, this is too high, much too high, and it's 6 rand now. So.
I mean, Wayne, you laughed ruefully because that is such a
yes.
It's a hard call, isn't it? Whether you hold on too long.
If we knew the answer to that, we wouldn't be sitting here chatting to people on television.
Oh, come on, you'd be chewing the fat anyway because you love it.
Yeah, maybe, yeah. No, possibly, yes. Look, statistically, you cannot continue growing at 4 times the market because eventually you will, over the compound time period of, 10, 15 years, you will be 96% of the market. And you will be bigger than the US GDP if you just compound indefinitely. So there is a statistical element of truth in this. You have to revert to the mean. There's also a theoretical element of truth to this, because if one company is absolutely milking it and making money hand over fist, other people are going to come and join them and give them competition.
Yes.
Because that's capitalism. If people can smell money being made somewhere, the ability of capitalism to divert capital into that endeavor is astonishing. So that's another element there. In my experience, good companies always win. They don't necessarily carry on winning to the same extent, but they always maintain a competitive edge, or they just disappear.
Okay.
If we look at IBM, we look at Intel, we look at Cisco and companies like that, who are leaders in the early parts. Yes, eventually they do, fall apart, but you get plenty of signal that things are not going well. The Nokias of this world, the Blackberries and so on. But I mean, the one thing about being in the market, you can get out in a minute. If you're wrong, you don't
get back in.
And you can get back in. We forget about that. You can trade easily. It's not like a decision that's going to take a year to get back in. So if you feel you've done the wrong thing, get out. Touch the button and out you go.
Yeah.
So so ride it until you really feel it's losing momentum and that, but don't suffer from vertigo.
Okay. Okay. Then a question which is, I suppose, a bit of an unanswerable one, but I'm going to ask it anyway. What's the panel's Rand dollar forecast if Trump is elected? And also the Rand, maybe sterling, if Labour win the UK elections? So firstly, Rand dollar if Trump is elected president. Trump. Wayne, what do you
I'll
think?
leave Wayne first.
Yeah.
I have to think about this one.
I don't think it'll have a dramatic effect directly on the Rand, to be honest. There's, first of all, the world economy is a far bigger driver of the Rand's valuation than any president or prime minister in either country. So I don't think it'll have a material impact. Whoever wins in specifically the UK, I don't think it'll affect the Rand at all. Trump, who knows, it might be a bit of volatility, but we've had this before. I mean, it's not as though it's the first time Trump's around. And during that time period, the Rand was dominated by what the commodity cycle does, and that's what always dominates the Rand's valuations, what the commodity cycle is doing. So maybe some shorter term volatility is if Trump wins, but fundamentally, if the Rand's going up, it's going up, irrespective of Trump. If the Rand's going down, it's going down, irrespective of Trump.
I mean, just lastly, I mean, David, having said that and taking that into account, do you think there's a few cents in anti South African rhetoric that may come from Trump?
That you can bet on. He's not going to hold back. He's not going to be polite or politically correct. You've heard his views on Africa before. I think it's just he's going to double down on that. I think he'll probably be good for business because he reduces tax. He's good for American business. He puts on tariffs and is going to have another go at China. But in the end, I don't think it's going to make a huge amount of difference. I think I believe in a decade of American hegemony, of dominance, simply because of the technology. And I think, America, whether it's up or down, whatever it is, the dollar is going to remain strong. So we're going to have to measure the Rand against that.
We shall move on to EOH. And the question is, firstly, what did the panel think of the EOH trading update? And then here's a really interesting question, and I feel really sorry for this individual. He says, I held 70,109 EOH shares this morning. EOH traded between a range of 129 cents and 131 cents. Then at 11:58 a.m., one share was traded at 102 cents. This triggered my stop loss, and all my 70,109 shares were sold at 103 cents. The very next trade was back at 131 cents a share. Surely the trade of one share is obviously not an economical trade, but a manipulative one. The share price dropped 21%. Is there no protection for retail investors against these unscrupulous actions? So what do you do in that case if your stop loss is triggered and it's a weird...
Yeah. You're talking to the wrong person, because I monitor this all the time. And I suddenly see, those kind of movements. And when I go and look into it, it's 12 or 13 cents. You're talking to a computer who's got no logic. It's binary. That's what binary means. Black or white, 1 or 2. What's it, 0 or 1?
Yeah.
So the computer says, if the share price gets by that level, boom, out we go. So can the JSE make it volume adjusted? Should it make it volume adjusted? Probably, because it distorts everything. I mean, it is a major distortion of issues. So the poor man has got a point.
So what do you do? Share, do you go and talk to the JSE or your stockbroker?
They don't care. That's the program. That's what markets are. One share does that. You can't. There's nothing you can do. So I know it's frustrating and very angry, but your whole fortunes can shift on one share because somebody has to get out, and that that they're allowed to trade. That it didn't correct later, but it triggered that stop loss. That's what stop loss does. That's the danger of a stop loss, because it doesn't ask questions. As long as it hits a price, it triggers the sale, and then it bounces up. It doesn't say, oh, well, maybe we should wait for Mr. Spit. I know that, it hasn't got that kind of logic.
Wayne, in your thoughts, do you have any recourse or?
Look, I don't think you've got any recourse. I think David's 100% right, but neither of us are experts on it. If one share trades, as long as there's no law that says each trade must be at least 10,000 Rand or 40,000 Rand, then that's it. If a share falls and the price goes down and your stop loss is triggered, then you sold. And it's terrible, it's unfortunate, but I don't think there's any recourse, unless you can prove that that one share that traded was an effort to manipulate the share price, and a person did it with intent to manipulate the share price for whatever reason. But unless you can prove that, unfortunately, that's the market.
There is a circuit breaker. If a price goes on, the bids and offers, and it's going to take, the share down by a certain percentage, you do have that circuit breaker. You have that volatility auction. So I'm surprised that was missed. That's concept. There is that function in the markets that they won't let the trade go down, until there's a volatility auction, which gives you a chance to perhaps correct it.
Yeah. Okay. Well,
that might have been missed by that, the person who wrote that question.
Yeah. Okay. But onto the EOH trading updates, which was fairly comprehensive. Did either of you have a look at it? Wayne, is it something that you paid attention to?
No, look, to be totally honest, I didn't look at it. When you consider the history and what has been happening with EOH now, since the beginning of January 23, well, it's more option money, man. It's not a share where we would even think about putting investor money into.
Yeah. Okay. David?
Yeah. No, I'm just quickly glancing through the trades that took place on today, and there were a lot of one shares that traded. I don't know why one, and didn't really swing the price too much. So it traded between 131, 132, all around those kind of levels. So I mean,
and then this freak traded 103 cents.
Yeah, it was freely traded. There wasn't any manipulation today. And it's in such a small price range between 120, 125 and so on. Percentage wise, it's big, but I mean, in terms of the amount of value that went through, it's pretty small, very, very small. So that's the market. When you deal in small caps, when you deal in companies this size, that have a market cap of under a billion Rand, you're going to expect this kind of volatility.
Yeah. Okay. Moving on to the bigger caps, and we were talking about the dollar earlier, and the viewer says, since the dollar is losing a bit of value and stocks are increasing their share price, what will happen to the value of shares like AMD and Google should the dollar fall or lose too much value? Because the companies will still have value to offer even if the dollar falls. Does currency affect their share price? Wayne?
Well, yes, it does, because they've got lots of overseas businesses all over the whole world that have got to translate back into dollars. So a weaker dollar might actually be slightly beneficial to them. But essentially, it's a dollar-based asset. So if the dollar weakens, it doesn't necessarily alter the outlook for the business or either of those businesses. They are essentially dollar businesses.
I don't think Americans think that way. I don't think they understand. I don't even think they know that there's a euro or a pound. I honestly, I know at one stage when the dollar was very, very strong, and it did affect a number of earnings that came in, when we were looking that closely at earnings. It does affect them. It does have some kind of impact, but I don't think it affects market sentiment to a large extent. It's driven by the dollar.
Yeah. Okay. Moving on to a comment maybe that followed from what we were talking about at the beginning of the show, that South African stocks in particular look cheap. The viewer says, I'm up 16% on my JSE stocks compared to 40% on my US stocks, and even my few European stocks are up 13%. He doesn't give the time frame. Nothing seems to attract me to JSE listed stocks. Comment? Is he maybe missing a trick?
No, look, obviously the past, we've in the commodity down cycle, and when in a commodity down cycle, the whole of South Africa is negative. So, I say this just about every time I talk. Don't look at past performance as an indicator of future performance. You've got to understand where you are in the economic cycle when you talk about South Africa and the rand. You cannot just assume that this is not a cyclical phenomenon. It is. Now, I know we're not going to experience anything like we did when China started going crazy in the 20 years ago. But at the end of the 90s, South Africa was in the absolute doldrums. Every South African asset was a dog, and global assets were shooting the lights out in total. Then from 2003 to 2008, our share market now remember, no one wanted to touch South Africa. People were schmockling their rands out legally and illegally as much as what they possibly could. All the asset swaps were the hottest property in investments. People were killing each other to get their money out of South Africa. And what happens in the next 6 years? Our market outperformed the US market by 350% in dollar terms. Now, that's not going to happen now, but the circumstances that arose then are very similar to where we are now. We are at the bottom of a commodity cycle, same as we were in the late 90s, early 2000s. Yeah. Got to understand that.
Okay. Of course, we had a lot more goodwill towards us, and we had a very high growth rates, as I recall, between 2003 and 2008.
But we had a high growth rate because of the commodity cycle.
You've got to look at the commodity market separately. Okay. When I start to unpack NASPERS and process, for example, I'm extremely worried about China. Low growth, industrial policy, or just general policy. When you look at companies like the smoking companies, they're not going anywhere. So you've got to break it down like that. The other thing that worries me, Juliet, when we're seeing some quite good results coming out of retailers, but what it does do, it's beginning to show you or demonstrate falling volumes. Even though, because remember, you've got inflation 7-8%. So there's a worry, because when you look at the volume sales, they're down and they continually go down. Yeah. It means people are still spending but buying a lot less. So I think there's, at 1.3% growth here for the next 3 years, you've got to be very picky about where you go.
Okay, well, I'll get to stock picks just very quickly. There's a question on Glencore. Goldman Sachs suggests Glencore is somewhat undervalued at the current price. What did the panelists think? Your quick fire answer, Wayne.
Yeah, I think yes. I think all commodity shares are undervalued, gold excluded.
Okay.
Yeah.
All right. Stock picks this evening. David, what's yours?
Well, I'm going for Eli Lilly, and the reason is I read an article in the Wall Street Journal, and it said, all these weight loss drugs. It said that it doesn't matter whether you've got coverage, meaning medical aid coverage, because they're selling everything they can produce. So between Novo Nordisk and Eli Lilly, as many injections that they can produce, we got to be politically correct about how we explain what they do. I think this is going to go on for some time until the competition comes in. Wayne made a very valid point about competition coming in. So I think there's a Business Week article. It said JBL, just buy Lilly.
Okay, just buy Lilly for now, and then watch it. Okay.
And when everybody's shrunk and half their weight, then you can sell them.
Okay. Then you can start buying the fast food companies again. Wayne, what's your stock pick?
Very quickly, going for 91, great company. If we do get a bull market in the globe on the lower interest rates, they will benefit obviously from that. And there was this perception index that came out about asset managers in South Africa, and I think they're third or second behind Alan Gray. I mean, really good. But just the last comment on what we were discussing today, understand when you cannot find a single reason to buy a share or a country, if there's absolutely no reason you can think of to buy something, it's maybe a good time to buy. And also when you cannot think of a single reason why you should sell anything, it's probably a good time to sell.
Sage words from the veterans. David, Wayne, we shall leave it there. Thanks very much for joining us this evening. David Shapiro is from Sasfin Securities. Wayne McCurrie is from FNB Wealth and Investments, and up next, The Close. Stay with us.